All right, Evan, not to be outdone on the news front, we have some fresh data from market research firm IDC on wearables and VR. And I really love checking these out. I think it's a great at-a-glance for what's going on in the consumer tech space. This firm does such a good job giving people like the 5,000-foot view.
Right. I mean, these are really exciting markets just in general, and getting this data on these estimates and how it's going is a really useful tool for investors to see, when they're looking at their investments and their companies that are playing and participating in these markets. So, I mean, wearables is a particularly fun one, since wearable tech is kind of a nascent category that's still on the up and up. So what we saw this in the third quarter was that basic trackers returned to growth. Those kind of Fitbit, fitness trackers, thanks largely to new product launches in emerging markets, where basic trackers are still pretty popular in emerging markets because they're more affordable. The U.S. market was actually kind of flat in the third quarter because that market is already transitioning from first-time purchases towards replacements and upgrades, which is actually, in my opinion, sooner than I would have expected.
One of my favorite things in looking at these reports, though, is who's moving where in terms of market share. We get to see the competitive landscape, and that's always fun. What did you see there, Evan?
So this quarter, we saw Xiaomi reclaim number one. Apple had been number one for the past 2 quarters, thanks to its Apple Watch. But Xiaomi's Mi Band 3, which is a basic tracker, has been selling really well. So they're able actually to take number one in the third quarter. But if you look at smartwatches specifically and you exclude basic trackers, Apple is still number one. And in terms of the Apple Watch, they launched the Series 4 at the very end of the quarter. So they only had about 10 days left in the quarter when Apple Watch 4 launched, but they also discounted Apple Watch 3, so that actually that lower price point has also been helping drive demand and drive unit volumes. And Series 3 expectedly was the majority of units, but according to IDC's estimates, the Series 4 was actually almost 20% of unit volumes in just 10 days. So I think that shows how strong the demand for Series 4 was at launch.
That's pretty incredible. We can't talk about the wearables space without also talking about Fitbit. We've given Apple Watch its time. What's going on with Fitbit in this report?
So Fitbit has become the number 2 player primarily with its Versa smartwatch, which is much more approachable. It's a little bit cheaper, and that's what we've seen play out over the past couple of quarters. I mean, you and I have covered their earnings a couple of times, so we've seen this coming. And I think the good news for Fitbit is that IDC expects them to kind of keep that number 2 status in the smartwatch market, mostly because, as we mentioned in previous shows, I mean, Android Wear or Wear OS is really just not competitive, and no one's really buying those devices. So we need, the market still wants some alternative to the Apple Watch, and Fitbit has stepped up to provide it.
Yeah, it's probably good for consumers to have a couple different options out there, right? It's nice to have some competition, nice to have a little bit of a push on the feature side to keep innovating.
Right. And I mean, the big thing that IDC points out is that, healthcare is really becoming a core part of this market. And Apple and Fitbit are both really pushing towards these digital health platforms in their own different ways. Now, who gets there first and who can really build the most robust platform is an open question, and it remains to be seen. But certainly Apple has a lot more money to kind of invest in building it. But that is going to be a pretty big thing to watch going forward, is the underlying platform of these devices.
Okay, so thinking about this market, though, you have the low end and the high end. It sounds like any hardware profits are going to be made on the smartwatch side. The maybe market share gains are going to be happening with the cheaper end of the market. How do those factor into the health solutions that these folks are looking for? Is it that if we want to track who's going to have the better health platform, we should be looking at the high end smartwatch sales?
Right. I mean, the basic trackers, they're just so limited in the amount of data they can collect. So I think, the value that people are putting into the actual platform will also determine what kind of device they're interested in. And if you look longer term, I mean, smartwatch prices have been coming down quite a bit. Apple does this thing, and they've been using the same strategy for the iPhone for many years, where they extend the overall life cycle of a product by selling the same product over years and years, but they just lower the price over time. So as those prices keep coming down, the difference between like going out and buying a basic tracker or buying a smartwatch, even if it's like a previous generation smartwatch, will keep getting smaller and smaller. And as that gap shrinks, more and more people will be willing to make the move up market into a smartwatch that is more capable, can do a lot more things, can collect more health data, and give you more value out of those health platforms.
Yeah, it doesn't feel like as much of an upfront investment, right?
Right, exactly. And I mean, especially if the difference is small. If the difference between a basic tracker and a smartwatch is $20 or $50, which one would you pick?